The market makes another higher low, but can it break out to the upside? This is what you need to know before the bell. Last week, the market sold off on Wednesday and Thursday on news that the Fed is still going to hike rates above 5%. Both James Bullard and Loretta Meister talking about higher rates still coming in order to combat inflation. Markets did sell off, though, came back down, broke the 50-day moving average, and found support right there at the 20-day, 100-day moving average crossover. So that support now holding very strongly here for the markets. The market rallied all the way back to that 200-day moving average on Friday. Futures are pointing higher this morning. We'll see if we can get this breakout to stick above that moving average. Now, of course, we've been talking about this for a while. The market technicals are improving. Lots of negative sentiment in the markets, of course, and investors still remain very bearish. But the underlying technical structure of the market are looking a whole lot better. We have these rising lows now that go all the way back to October, set bottoms in December, and this recent pullback to the moving average support line may have formed another short-term bottom here for the markets. Of course, right now we have this downtrend line that exists going all the way back to the January 2022 highs. That price pressure consolidation is all converging right here at the 200-day moving average. So if the markets can break above both this downtrend and the 200-day moving average, there is a real possibility this market can make an advance up towards 4,200 here in the short term. Now, we need a little bit of positive catalyst to make this happen. Earnings, of course, will really pick up steam next week. We're going to be hearing from Microsoft and others this week. That could certainly help either hurt or help the markets depending on what their forecasts look like. But we've also got the Fed meeting coming up very shortly. Now, Fed fund futures are already suggesting that the Fed is going to be capped out here around 4.8% on Fed funds rate, but the Fed saying above 5%. We'll see what that meeting says. If the FOMC comes out, confirms that maybe 25 basis point hike and they're done, markets are going to like that most likely. Keep a watch on what their expectations are. Now, the problem with the market advance, as we've said before, is that eases financial conditions. That's not what the Fed wants to try to fight inflation. But the markets are front-running the Fed right now saying, hey, we think you're done. So again, keep a watch here. While there's a lot of bearish sentiment in the markets right now, the market technicals continue to improve. Our buy signal is still in place right now, and markets are not grossly oversold. Furthermore, if you take a look at stocks trading above their 200-day moving average, we now have a majority of stocks trading above their 200-day moving average. That is also helping support this potential move higher in the market. So again, be careful here right now being overly bearish on stocks. The technicals are improving, but also be careful with a lot of these things like emerging markets, international stocks, etc., that have had very big moves this year. Lots of short covering in those areas. So again, we may see a bit of a counter rotation from what was working early this year to maybe some other areas of the markets. Keep a watch for that. But again, be careful chasing asset prices right now. Again, things are a little bit extended in the short terms, but again, keep a watch on this technical maturity here. It is starting to improve, and so we want to give that at least some reasonable benefit of the doubt for now. I'm Lance Roberts, and that's what you need to know before the bell. This is what you need to know before the bell. Are you happy now? Yeah. Can I do anything else for you?
Careful. You'll be caught on an outtake.
Just want to make sure you're happy.